Hey, it's Clay at claytrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is a part of my Inner Circle subscription service, the other part being the live chat room. Before I go any further with this video, though, in the review, a couple quick disclaimers. First off, am I trying to portray or imply that every single alert that is sent out is some sort of money-making, brilliant masterpiece? Absolutely not. Nobody is perfect. No scan is perfect. There are no guarantees in the market. Losses happen, which segues into the next point, but that's why risk management, risk analysis, risk control needs to be the focal point, because losses are going to happen no matter what other people may try to tell you, no matter what other people may try to portray. Losses happen to everybody, so you have to be able to manage that very closely and very wisely. But on the flip side of that coin, wins also happen. So when those wins do happen, that's why the managing risk is so important, because you want to make sure your account is still in a proper spot where it can grow and let the wins win, and therefore, wipe away those losses and keep your overall account going in the upwards direction. Second, we are going to be going back to the week of February 25th. Why are you going so far back in history? Fair question. Two reasons. First, it's just given the chart enough time to play out so we can see what has actually happened with it. Second, a matter of being fair. The last thing I would want is for you to pay for something and then all of a sudden you see that stuff that you paid for out there for free. That I could see you feeling kind of ripped off by me if I were to make you pay for something and all of a sudden I'm giving it away for free. So that is why we're just giving the chart plenty of time to play out, and a matter of being free to paying members. And to offer up a little bit more context here we are at bankrate.com, and I had some messages from people just commenting on this. So that's kind of neat to know that this is striking a nerve with people and helping to build perspective and build a context. But we're looking at CD rates here, and I mean, this stuff is absolutely crazy, and this is up to date right now. So for April 2019, which is when this video is being released. But I mean, look at these numbers: 2 years, 2 years, 2 years. 2.9% or 2.95, 2.98. Oh, hey, there we go. We finally got to 3. But for how long do you have to hold? 2 years for 3%. So just keep these numbers in mind. First chart I want to look at that was sent out was for AMRS, and just kind of threw out the question, is the consolidation ending? Big move up, pulled back, started to go sideways, and showed some signs of strength, but wasn't quite, any sort of breakout or anything like that, hence the red line right there. But at least throwing out there, hey, is this consolidation finally ending? So let's see how this played out. Before I go any further, I should have brought this up earlier, but first off, one of the big questions I get, Clay, what prices do you alert? I alert whatever I think has a higher probability of success, or I should say the highest probabilities of success. So if that means it's a $300 stock, or if that means it's a sub-penny stock, I will alert it, assuming there's certain characteristics that I think give it a high probability of success. Second, when is all this sent out? This is sent out every weekend, usually on Saturdays. That way you have as much time as possible to put together some sort of thought process around it. The last thing I would want is to email you out or something where, all right, I gotta make a decision in 2.7 seconds, and then bad things happen. But with this, it's sent out over the weekend. You have all weekend long until Monday morning comes along and the market opens up. So that's how the newsletter works as a whole. You can check your email or just access it through the site itself. And what we were looking at the first screen was just the behind the scenes of that newsletter section of the Inner Circle itself. So here was the chart going into the weekend, and as far as how this all played out, I'm gonna. This was a no play, meaning I'll show what I mean. Like I said, there was never any break of that resistance line suggesting that maybe this consolidation would be over. But let's just say, for a hypothetical, and so we can kind of make a larger example. Let's just say that you decided to buy. Again, as far as the alert was concerned, that line was never broken, which suggested the consolidation was never ending or anything like that. But let's just say you bought anyways. And then that happened, and you're thinking, okay, well, there we go, got the bounce back upwards, and then that happened, and it fell, and you're like, you know what? But it'll come back. It'll come back. I'm just gonna. It'll come back. In other words, you're being undisciplined. Look at how nasty it got When, like I said, you could have been out somewhere up around here for a nice controlled loss, and that move there was 61.4%. Granted, it's bouncing a little bit now, but do you get the idea here that I'm trying to convey is by being undisciplined, by not following rules, who knows, by not having rules, by not avoiding a certain situation. I mean, this was just a nasty, nasty move to the downside. But like I said, always important to kind of keep an eye on what's going on. And is this consolidation ending? No, it was not even really a true consolidation because it totally cratered out of there. But let's just say, like I said, but you got undisciplined. You didn't take a 60% loss. But I don't know. Let's just say you took a 40% loss. Next alert to look out that was sent out for CLVS. And as you see, just is the trend line break coming? So we had this trend line right there. You can see that these were some higher lows being built. So, kind of just a question of, hey, is the price finally going to get some sort of breakout of this trend line? Let's see how this played out. So here's the chart going into that first day of the trading week. You can see right up there, the power of charts rejected right down by that trend line. The next day, actually pulled back. I'll be honest, I really wanted to do the calculations from down here like, oh yeah, and then you bought it off that support, which is not unreasonable at all. I mean, it's bounced off there before. So I mean, to then say you got in right there, but I didn't. I didn't base the calculations off that. I still base it off of, buying the trend line break. And you can see from there, very nice follow through. And then started to pull back. But that move right there equated to 23.7%. And let's see. 1, 2, 3. 3 days. And I mean, let's say you didn't play it right. Let's say you screwed up half the trade. So you're sitting at about 11%. Okay, 3 days and 11%. What was that other one? 3 years for, what was it, like 2% or something ridiculous? No, 3% for 3 years, right? 3 days, 11%, or who knows, maybe you played it better. Maybe you did get 20% out of it. 3 days for 20% or 3 years for 3%. Okay, that didn't sound right. I thought I was lying. Not 3 years, 2 years. 2 years for 3%. Regardless, 3 days for 11, 15, 20% or 2 years for 3%. Hopefully you can see how my goal here. Let's keep things in perspective. The next one to look at here, MNKD, and I just kind of steady rise. It's just been steadily rising up and up and up, and then I point out how the key break point was right up here, right around the $1.60 mark. So let's see how this played out. So here's a chart over the weekend. First day of the trading week, you can see got up around there, didn't quite break out, but right there got the high volume breakout of that $1.60-ish area. Pulled back a little bit, went through a consolidation, very healthy consolidation. And then right there, just absolutely continued to take off and went up that high for a profit potential window of 46.4%. All of this in, let's just call it 3 weeks. And again, we'll say you screwed up half the trade, so you only got 23% out of it. So 23% in 3 weeks or 2 years for 3%. I'd say this was pretty good. Was it, 100 or a 3-digit percent like others do and like I've done in the past? But I mean, I'm not saying that 3-digit gains can't happen. I'm just saying if you're looking at something saying, oh, I only made 23% in 3 weeks, that is terrible. Walk into your local bank or go find what the current bank CD rates are. I mean, come on. 2 years for 3% or 3 weeks and 20%, 23%. I mean, to me, I think that does a great job of keeping all this in perspective. And then finally, with the feedback, a lot of you enjoy seeing how this shorting thing works. A lot of people are not aware of shorting, but in a nutshell, shorting means that when prices go down, your profits, your account value goes up. I'll say that again. When prices go down, your account value goes up. I have lots of other videos about how exactly that works, but that's what shorting is. And this is another part of the newsletter that is sent out. But there's no charts or anything because this is for people that have gone through the course. They know, they have the knowledge, right? They know the setups. They've been taught exactly what they need to be looking for. So I don't really need to point anything out because I'm just kind of throwing them in, hey, there might be some fish over there. but they know how to get over there and then catch the fish themselves. So this is more so just like a fishing alert where things may be. We're going to look here at TMHC. If you're wondering, that one would have been a good solid win. Also on the week, that one would have been a loss, and I'm assuming just a good discipline loss. So let's see what happened with TMHC. So here's the chart before the first trading day of the week. And again, if you see the price start to go down, that is actually a good thing for anybody that is going short, and which gives full flexibility to us as traders when you can make money whether prices are going up or down. So you can see right there, nice start to the week, and things just got that much nastier. And they just got that much nastier. And that move down there was good for 11.9%. So 11.9% on the short side, not too bad at all, especially when you think back to those bank rate CDs. Now to wrap things up here, think back to, that was a good solid week. Nothing massive, nothing gigantic, but good, solid gains. But what happens, what if? What if you had done and taken that 40% loss? You may actually still have been able to dig out of that hole with these other, alerts that we went over, but if that's a big maybe, and even if you did, it would have just been a small little gain on the week. So the point being, that's why you need to understand risk. That's why you need to understand when to avoid something, because there is profit in avoiding. If you avoid a situation that you should be avoiding and you never take a loss in the first place, a penny saved is a penny earned. So that is why always understanding, having a game plan and knowledge is so important, and why just even if you do have a game plan, you need to follow the game plan, because on AMRS, not following the game plan could have resulted, as you saw, in a very nasty situation. And although you could have capitalized on a lot of those other winners, it's really hard if you allow that hole to get, too deep. So just keep that in mind. And like I said, as far as the allure is concerned, no, that consolidation never ended. It never broke the resistance. But hypothetically, I think there is a good underlying example there of why, understanding and following your game plan, assuming your game plan even makes sense in the first place, is so important. But to wrap this all up, final few things here. If you're interested in learning more or joining, we just talked about the power profit scans. Like I said, there's also the live trading chat room, and there's a bunch of these other things. There's a mobile app that comes with it, and that is available at no additional cost. So it's not like you have to stay chained to your computer or anything like that. As of now, the price is $99 per year. I say as of now because the prices will probably be going up. I don't know exactly when, and that'll probably be changing to $197 per year, which is still dirt cheap. But as of now, yes, it is still $99 a year, which if you break down the math goes to $8.25 per month or $1.90 per week, whereas $197 breaks down to like $3.85 per week. So, I mean, it's one of those things where it's like, yeah, if you can't afford something that costs $3.85 per week, not quite sure the markets are for you at this time. You probably have some other things in your personal finances to tackle. But regardless, as of now, yeah, $99 for 1 year. And as I tell everybody and say every week in this, over the time span of 12 months, I'm more than confident you're going to get at least $99 worth of value. And I realize that bar is not set too high, but that price level keeps out the pumpers, it keeps out the bashers, it keeps out the trolls, and it allows for a very constructive environment. And that's what I'm looking for as a trader. So go there. You can go to claytrader.com inner circle to sign up. Let me know if you have any questions. But if no questions or anything, then yeah, get signed up and I'll see you on the inside.